Bitcoin just got rejected and we had 290 million exploit. At the same time, BlackRock is about to launch a new Bitcoin ETF. Michael Saylor is buying billions. So what is actually going on right now? Because this is not normal. So in this video, I'm going to walk you through it step by step. First, we will have a look at the Bitcoin chart and then the Kelp DAO situation. And then we'll zoom out a bit because there is something bigger happening with the system. We will talk about that later. Let's get started. All right, let's start here. So this is the Bitcoin right now at the 4-hourly chart. We can see exactly what's happening here. We pushed through the 78,000 area. Finally, we were breaking out, but that didn't last for long and we got rejected again. We got rejected because of the resistance of this channel. We are sitting right now at 76,000. And in my opinion, there is a lot happening now because of the geopolitics. And to be exact, the Strait of Hormuz is open, is closed. And so all that is playing out here. So now let's take a look at the long to short ratio before we carry on. We can see here it's favoring the bears. They are at 52.31%. And so the bears are in favor. And we can see here the percentage is minus 4.6%. Now let's have a look to the daily chart. So could we spike from here? Yes, we could, but take a look at the whole move up here. We see the volume is quite high. Now we see the volume is declining. So again, we're going to go to the boring area maybe. But if you are bullish, you have to hold this level here, the 73, as this is critical point. So are we breaking out from here or are we going to revisit this area? And this is what I'm keeping an eye on. I want to show you something quickly. So let's take a look at this one. Look how, this is the 4-hourly. Look how are we holding nicely this uptrend. Are we going to build from here or are we going to lose momentum and revisit this area? And this is the question. That's why we're going to keep an eye on. So while all of this is happening on the chart, something else happened over the weekend. So let's talk about it. It's the Kelp DAO. Here on CoinDesk, we have Kelp DAO claims Layer 0's default setting are what actually caused the massive $290 million disaster. And this is the interesting part. So they are blaming the Layer 0. So let me just start to explain what Kelp DAO is. Kelp DAO is a DeFi protocol built on Ethereum. So what it does, you deposit your ETH or liquid staking token. It restake them to earn like extra yield. It gives you a token back like RS ETH. So instead of your ETH just sitting there, it's working in multiple layers. And you tell me what Aave has to do with all that. So Aave is a lending platform. So what people do on Aave, they deposit their crypto as collateral. They borrow other crypto against it. For example, you deposit that ETH and you borrow USDT. And this is where it all connected. So Kelp DAO is not on the top of Aave. It's not part of Aave. They are separate protocol, but they are connected because users, they do this. They deposit their ETH into Kelp DAO. They get RS ETH. They take that RS ETH. They use it as a collateral on Aave. And this is where the exploit happened, taking them from one place to another using that bridge. It's the connection. So Kelp DAO creates the asset and Aave lets you borrow using that asset. So Aave depends on the value of the safety of that asset, of course. So what happened when Kelp DAO has a problem? So if something goes wrong in the Kelp DAO, RS ETH becomes risky or loses value. People panic. They rush to withdraw from Aave. Then liquidity gets tight. Loans get unstable and positions get liquidated. So it's a cascade. And that's how problems spread. So again, it's not the protocol itself, it's the cascade. So if you ask me, is Kelp DAO decentralized? The short answer is partially decentralized. Because like most DeFi, meaning smart contracts run the blockchain, and this is completely decentralized, but some part rely on Oracle bridges like Layer 0 or external infrastructure. And this is where you take one asset from one place to another. And this is where the risks comes, as I explained earlier. So I want just to show you something here on Aave. Aave is trading at $91 right now. And look at this when the exploit happened. Look at how this dropped. Look at this, all this red candle. That's horrendous. Now let's go to DeFi Llama. Let's go to Ethereum. Aave is the second biggest lending protocol. You can see here, it has $13 billion in total value locked. And it went 38% down on the last 7 days because of the exploit. If we go here, we see, look, before that happened, we had, how much was it? Around 25 billion. And then after that, it went to 17 billion. That's crazy. So just to conclude, so the exploit wasn't just Kelp DAO is dead or something like that. It's this. They rely on the layer 0 infrastructure, and that part got compromised. So the blockchain itself is secure. The connection between the system is vulnerable. Now, and this is where things start to connect, because right now, after something like this, you start hearing more conversation about security risks that most people ignore. Now, check this out. We have from the Bitcoin archive, Cypherpunks, Jameson, and other Bitcoin developers propose BIP 361 to freeze quantum vulnerable wallets. So they are proposing something called the BIP 361. And the idea is simple. Wallets that are vulnerable to quantum attacks could actually be frozen before they got hacked. So why does this matter? Because there are a lot of wallets that have been sitting there for years completely inactive, and we call them dormant. And those wallets are the most exposed. We're talking about things like Satoshi's wallet alone. Let's have a look here. So this could lock dormant BTC like Satoshi Nakamoto's 1.1 million coins, now worth 74 billion before quantum computers can steal them. 74 billion. That's insane. Now imagine if one day technology gets stronger enough to break that kind of security. That's not just a hack. That's a shock to the entire market. Now again, this is not happening tomorrow, but the fact that developers are already thinking about this tells you something important. The risk is no longer a theory. And especially after what we just saw with the exploit, it became very clear security is becoming the main focus again. Now, while all of this is happening on the developer side and on the DeFi side, look at what's happening on the institutional side. BlackRock, everything we know about BlackRock, new Bitcoin income ETF. BlackRock has filed an S1 form with the SEC for its iShare Bitcoin Premium income ETF. They are about to launch a new Bitcoin ETF beta, and what they are doing is interesting. They are not just holding Bitcoin, they are selling options to generate income. So now Bitcoin became not just an asset, but a yield product. That's a big shift. And at the same time, someone is buying more Bitcoin. Mike Saylor's strategy buys 34,000 Bitcoin worth of $2.55 billion. He's not stopping. He's unstoppable. And at the same time, we have Tom Lee as well from Bitmine. He buys 1,001 ETH worth of $235 million. And he's also loading on Ethereum. So while all of the noise is happening, the big players are not slowing down. Now, let's zoom out for a second, because this is where it gets uncomfortable for some people. And this is what I was talking about in the beginning of this video. We've probably heard this already, but the petrodollar system is not as stable as it used to be. Saudi didn't renew things the same way using the petrodollar. And slowly things are shifting. We're starting to see cracks. Countries like China are pushing to settle oil trades in yuan instead of the dollar. And that might sound small, but it's not. Because if oil, the most important commodity in the world, starts moving away from the dollar, that changes global liquidity, that changes capital flow. And that eventually affects everything. Stocks, gold, and of course, Bitcoin. And at the same time, we've got stablecoin regulations coming in, new bill, the clarity, new framework, and on the surface, it looks like innovation. But if you think about it deeper, if the system changes and unemployment rises, how do we distribute money? Digitally, programmable, controllable, CBDCs. Now you might think this sounds extreme, but just watch how all of this connects over the time. I'm gonna make a separate video about the CBDCs, so keep an eye on this one. So yes, that's everything happening right now. Bitcoin getting rejected, massive exploit in DeFi, and now developers talking about freezing wallets before future risk from the quantum even happen. When you connect all of this, you start to see the bigger picture. This market is not just moving randomly. There is a lot of things happening. Anyway, that's it from me today. Thanks for watching. If you found this useful, make sure to subscribe. It really helps the channel. Thanks for that in advance, and I'll see you in the next one.